Let's get in Abhishek Somani of Somani Ceramics to talk about what could the next 6 to 18 odd months hold for the company. Mr. Somani, good having you. Thanks so much for joining in. You're getting into ancillary segments as well. All of this coupled with this tailwind that we are possibly seeing in affordable housing and housing at large, does this augur well for the company in the second half and possibly for FY19 as well?
So I think the second half is still going to be difficult with the GST overhang still with us, and what is going to be important to see is that how we pan out the compliance part of it. So on one hand, they put the GST. So we had an issue with the pre-GST era and then the post-GST era, and then 28% went to 18%. So practically the first 6 months, in fact up till 15th of November, it was kind of a washout for us. Going forward, I think although on one hand we welcome the change of 18%, but on the other hand, the government has to take very, very stringent steps on compliance, because if the compliance is not in place, it's a free-for-all situation as of now. Evasion is absolutely at the hilt. It's never been so bad as we see it. So I think compliance has needs to get into place. Only after that we will see over time that this shift more aggressively towards the branded segment will happen. And we being now the second largest both in terms of value and volume will be the largest beneficiaries.
So you're saying that this overhang has not gone away. I mean, I believe it's been 20 days or 25 days since that announcement came about. The shift towards branded with the lower GST rates has still not happened. You're not seeing it on the ground.
I will see it on the ground, but on one side, if you put a tax rate and on the other side nobody is paying it, then how would this shift happen? So I think the compliance has to get into place, which is currently virtually not there. The e-way bill also we were expecting 1st of October, which has got delayed to 1st of April. That will be a big help towards one step towards compliance. But I think at 18% over time we will see more and more people getting towards paying taxes and in the tax net. But provided the government cracks the whip on them.
So okay, so then tell me, are you saying that unless these things happen, the natural tailwind of business is not good enough to revive what arguably has been a slightly washout first half for you as a company?
Obviously the second half is generally better, and for us it would be better too, but the kind of tailwind which we would have expected because of GST coming to 18%, that is not going to be felt at 100% because of the compliance not there on ground.
But natural demand supply, Mr. Somani, I mean, if I look at almost all reports that come out from the sell side, or if I speak to buy side investors as well, everybody has one story to say: home improvement is the next big thing. Demand is going to pick up, irrespective of what happens in terms of teething problems or otherwise. Volumes will pick up. You are not just present in your segment as the second largest player, you're also embarking upon newer products, I believe, faucets and some of the others. You don't think demand itself will take care of a lot of these other issues?
No, so I'm not arguing that at all. On one side, the government has taken a large initiative of Housing for All 2022. On the other hand, we have India, which is urbanized only up to 32%, and we are going to be only making more houses to get urbanized in the next 10 years to maybe 38 to 40% of the population. So nobody is arguing the demand side of it. I'm talking very, very short term. In the extremely short term, you asked me for the next 6 to 12 months. In the next 6 months up till March, there is going to be a little bit more pain. But overall, nobody is arguing on the demand. The demand side of India is extremely buoyant, and if you see on one side, I am saying all of what I've just said, but on the other hand, we've just expanded 5 million square meters of capacity, which has resulted in a 2.5 million net increase in my Bahadurgarh, in my Haryana plant. We're expanding another 5 million square meters per annum in May in one of our joint ventures, and we're expanding another 4 to 5 million same time next year in the South India. So on one hand, we're clearly gearing up enough for that demand coming through. So nobody's arguing on the demand. It's only the very short term where the pain is felt. And your specific question was for the tailwind for the second half. The tailwind of the second half is not going to be as much as what we have thought. But the home improvement space going forward, whether it's sanitary ware, tiles, bathroom fittings, etc., ply, paint, all of that is going to grow with the growing demand of more urban India and more houses being built. Also, commercial and government spending is up.
Okay. Are you, for your own business, are you trying to bring down the percentage of revenue that you get in from JVs vis-a-vis your own organic revenues? And what's the quantum or what's the bifurcation currently? Are you looking to change that? And if so, what's the target over the course of the next couple of years?
So we have three segments. One is own manufacturing, which is about 40%. Then we have JVs and non-JV partners. Most of it is in the JV hands. That's another 60%. I don't think this would change very much. It would be between the 55 to 65 range as far as JVs is concerned and the non-JVs are concerned. That depends on a year where we have a greenfield or a brownfield in our own manufacturing versus a green or a brownfield in the JV manufacturing. So I think this model is working very well for us. And a 60-40 ratio between own manufacturing and outsourcing, be it JV or vanilla outsourcing, would be a fair estimate going forward, at least for the next 2 to 3 years.
So having spoken about all of these, tell me if these assumptions that most people have for the sector at large and for Somany as a company, until FY20, a compounded annual growth rate of 14 to 15% on the revenue front, and EBITDA performing much better because the margin picture will improve for most companies, including yours. Are these reasonable estimates or are these bullish estimates?
I think I can talk for myself. I think for us, there's a lot of catch up to be done on the value added front and all the product mix front. So I think we would be bridging the gap between industry leader and us in terms of margin. I don't see we would catch up completely, but we would bridge the gap a couple of basis points. As far as the revenue estimates are concerned, too early to say, but I think by FY19 we should be again inching back to the early double digits and moving forward from there.
Fair call. Abhishek, Somany, appreciate you joining us and being candid enough to speak about all of the numbers and the teething problems as well. All the best for the second half. Well, if brokerages believe that all's hunky-dory, clearly managements don't think so. And Somany Ceramics in particular, not completely bullish about the second half and cautiously optimistic. I would believe that's the tone that came out.